This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed, you are watching across Bloomberg platforms, and this is Bloomberg Businessweek Daily for this Friday. Carol Massar, Tim Stenivek, live here at Bloomberg headquarters in New York City on a day where markets a little bit of a mixed trade, kind of assessing some of the earnings we got overnight, assessing the war, and assessing another round of tariffs.
We're going to have more from Charlie Pellet in just a minute. The S&P 500 up 0.4% right now. The NASDAQ Composite down 0.1%. The Dow down about half a percentage point. Oil, we did see Brent actually fall below $100 a barrel, about $96 a barrel right now. WTI at $89 a barrel. Still, Brent's up about 30% just this month, Carol.
Yeah, so a little bit of context, right, in terms of pressures. We're going to get into all of that. Hey, ahead this hour, kind of what is old is new again, kind of that kind of theme, if you will. So welcome back, tariffs.
I mean, very old if we want to go way back.
We just want to kind of deal
right?
in the world of President Trump. Also, welcome back Intel, welcome back software despite AI. Of course, on tariffs, President Trump rebuilding levies with kind of targeting 60 economies. So we're going to get into that, what it means. There was also just about an hour ago targeting the EU when it comes to some big tech companies, again, under Section 301. So what you need to know, Mike McKee is here.
We also are talking tech, too. You mentioned we're talking Intel. We're talking AI, too. The CFO of Board is joining us on why artificial intelligence can't do everything yet.
Exactly. Hey, the World Cup may be over. Yes, indeed. Yet the battle of the brands all over the players on and off the field, that continues. We're going to talk Adidas, if you were Matt Miller, versus Nike. So all of that to come over the next 60 minutes.
First up, a check of the day's trade and top business stories. Here he is. Hey, Charlie Pellet.
I thank you very much. We made it to Friday, and we've got some familiar themes for this equity market right now. Chip makers, they are declining today despite Intel's solid outlook. We've got oil retreating, and that is sending stocks higher. Let's begin with the Dow because the industrials are up 271 points right now, up by about 0.4%. S&P higher by 25 for the S&P 500 index. That is a gain of 0.4%. NASDAQ and the NASDAQ 100 index, however, they are both declining. NASDAQ down now by 0.1%. The NASDAQ 100 index down 0.5%. This after earnings from Intel. That stock down now by 4.4%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, it is down now by 3.1%. All of this with the VIX, Wall Street's fear gauge, just above 18, a 10-year at 4.67%, the 2-year 4.32%, and the 30-year 5.16%. Gold at $4,063 the ounce, up by about 0.3%. Crude, major story, down 3.3% right now, but holding right around $89 a barrel on WTI. Barrel of Brent just above 96.34 on Brent, down now by 4.3%. This time yesterday, we were talking about Brent trading above $100 a barrel. Chip makers, though, moving lower again. I mentioned the SOX, the Philadelphia Stock Exchange Semiconductor Index, down by 3%. Intel bears repeating, down 4.1%. Among other chip names, NVIDIA up 0.5%. We've got Micron down 6.1%, and Broadcom lower now by 2.2%. Recapping, S&P holding onto a gain, higher by 24 points, up 0.3%. Carol and Tim, that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. All right, let's get to it, folks. Deja vu all over again. The U.S. extended a 10% tariff baseline, hitting most major trading partners, prompting pushback from countries around the world while shoring up a protectionist wall that's been a top priority for President Trump despite its unpopularity at home. Man, like I said, deja vu. Weren't we here a year or so ago?
Yeah, we were. But this time it's different, we're at least told.
It is.
All right. There's a different legal challenge, too.
Yeah, and we should just kind of layer on top of this. President Trump, just about an hour ago, taking aim at EU funds against Apple and Google, threatening tariffs against the region. The president says the U.S. is starting a 301 probe into EU actions on U.S. tech. So There we have it.
Yeah, we got Mike McKee with us, Bloomberg News international economics and policy correspondent. He joins us here in the Bloomberg Business Week studio. Mike, I have trouble keeping track of all of these. Fortunately, you're here to set us straight. People are familiar with the Liberation Day tariffs from last year, struck down by the Supreme Court. I'm still waiting on my refund check. I don't know if you've gotten yours.
No.
Okay. You haven't gotten yours yet.
You're not likely to get one. Don't wait too long.
Okay, we'll get to that. The new tariffs that were laid out yesterday, 4:57 p.m. Wall Street time. How are these different than what the president did last year?
Well, the president did the Section 122 tariffs after the Supreme Court struck down his IEEPA tariffs, which gave him the ability to do 150 days of tariffs at 10% around the world. And that expired at midnight last night. So today they announced these new Section 301 tariffs, which is basically an effort to recreate the tariff levels that they already have. In this case, they're arguing Section 301 allows tariffs on national security grounds, or if the U.S. is party to treaties and people are not keeping up with the treaties. And it's kind of that part that it falls under, because the U.S. is accusing these countries of either using forced labor to produce things or not policing the companies that they're importing from. And so then they've levied 10% to 12.5% tariffs on these people, which is the same as what we had before with the 122s. So it doesn't change the tariff level, maybe a little bit for some companies, but in general keeps tariffs at about where they are.
It's just a different justification.
It's just a different justification that they hope will be legal before the Supreme Court. But while you were talking, we just saw a headline that some companies have already filed suit against the president on those tariffs, arguing that they're just an excuse for the tariffs that were already struck down as illegal by the Supreme Court. So we're back where we were, as Carol was saying, deja vu all over again. And now we have these other threats today on from the president on the 301 tariffs, arguing that it's not fair to American companies that the EU can fine them for breaking EU law. Yet,
some would say if the U.S. felt foreign companies were breaking the law, right, we would do that.
Well, of course.
We would impose fines.
Of course.
Okay.
But you're trying to be logical.
Okay.
What are the I mean, is there a does it stem from forced labor in China? Is that where all of this stems from?
What is that about?
Not necessarily. I mean, there is, and Bloomberg's done some award-winning reporting on this. Forced labor, basically slavery around the world in many, many, many countries, particularly in Southeast Asia and some in Latin America, where and Africa, people are just forced into producing for workers, and it can be actual slavery where you're imprisoned and you're made to do it, or it can be economic imprisonment, basically.
But are there? I mean, is it legitimate? Does the U.S. have a legitimate way of actually proving that these countries are doing business with companies that are using forced labor?
With a 301, you have to do an investigation, and so the administration has a written justification for these countries. Now, I would put some of it certainly under stretching the law as far as it will go. The United Kingdom, for example, or Canada. But there are some legitimate uses. And so we'll have to see how legally this all plays out. But what's happening is the president is using these, and he's going to put the tariffs in place, and they will be in place while whatever legal battles go on.
So essentially a mechanism for imposing these tariffs while everybody figures out really what he can or can't do.
Right.
Essentially.
Right.
So the Supreme Court ruling, like you brought this up because you've been talking with some of your buds or last night, who were like, how can the president do this, right? With coming after the Supreme Court ruling. This is just a reminder that he has different levers he can pull.
There are different levers, and there's a lot of disagreement about which ones are legal. And the court basically ruled in the IEEPA case, the very first Liberation Day tariffs, that Congress didn't give him the right to impose broad-based tariffs like that. That what Congress did was say the president could impose tariffs on case-by-case basis when there are obvious violations of U.S. law. So there's some grounds maybe to look at this broad 301 effort today as also problematic for the president, but it's going to be up to the Supreme Court to decide.
And what would the timeline on that potentially be?
Well, you're going to be talking probably sometime late next year, if then.
Okay, so let's push forward to the Fed next week and sort of the inflation.
Well, let me just mention one thing. There's another 301 in process for overproducing goods, which is similar to the idea of the dumping that countries are doing. And that one the president may add on to the tariff levels. So we may see tariffs go up from the 10 to 12% range, even higher.
So are tariffs inflationary?
They are, but not to the extent that we thought they would be, in part because the world has changed, but in part because a lot of the people who were tariffed, the businesses doing the importing, absorbed some of the tariffs. And then they were working off of inventories that they'd stocked up on because the tariffs were coming. So the price changes didn't hit people all at the same time. Now, you saw today that Qualcomm said they're raising their prices by double digits. So maybe we're going to get a bit more of a reaction now. But in the grand scheme of things, they weren't, to take it back to where you want to go, they weren't the kind of level of inflation that the Fed would worry about at this point.
But with Qualcomm, that would be like what Apple did as a result of memory prices, right?
Not that falls under the category of
as a result of
supply
tariffs.
and demand. There's more demand than there is supply for AI goods.
Right.
And that's something the Fed mentioned at their last meeting that they were concerned about in terms of inflation.
30 seconds, something really important before you leave. Most read or among the most read stories on the Bloomberg, LeBron James, a Laker no more.
A Laker no more. His contract is not going to be inflationary because he took a very low payday in order to join the 76ers, and hopefully he leads them. Hopefully he says he leads them to another championship. I'm sure anybody who doesn't live in Philadelphia doesn't have the same hope.
Yeah, I know we have some folks on our team from Philadelphia, and they were pretty happy, I think, about this. Mike, thank you so much. Really appreciate it. Bloomberg TV and Radio International Economics and Policy correspondent Michael McKee. All right, now let's get to the comeback kid, and by that we mean Intel.
Yeah, Bloomberg's Ian King writing, Intel's long-awaited turnaround is in progress now that the AI data center boom is fueling demand for its chips. And yet Intel shares, they actually reversed an initial advance that came after the company's third quarter forecast was much stronger than analyst expectations. Those results, Carol, highlighted both the durability of AI demand as well as the success of Intel's turnaround.
All right, we want to talk about that also. We just talked about with Mike about President Trump out on social about EU fines against Apple and Google. Let's start, though, with Intel. Stock certainly has pulled back from highs that we have seen earlier, certainly overnight and earlier in the session. Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh, is with us, joining us remotely in New York. Mandeep, Intel shares, you were with us. They rallied more than 12%. Following results. You were here with us. Shares coming back down to earth here, and they are lower as we speak. Post the Intel earnings call, what did we learn? Anything here change your thinking about the results?
Yes, I think the server side obviously was quite refreshing, that fact that they are under shipping demand. But on the client side, that's where the memory prices probably will have a bigger impact in the second half. And that's where I think Intel tempered expectations for how much that client side is going to grow in the second half. And the other thing I would call out is just the CapEx expectations. I mean, they talked about ramping up foundry and yields getting better, but when it comes to financing some of that foundry expansion, it wasn't clear that they have the balance sheet to do it, and if it will involve some sort of equity financing. I think the financing aspect just wasn't clear if they were to raise their CapEx, and that's where I think there was some nervousness around what this means to Intel's balance sheet.
Mandeep, we're going to talk about the week that was when it comes to tech, but before that, and kind of related to that, we did hear from Alphabet, and certainly concerns about Alphabet's CapEx and people thinking, okay, well, how do we add that into the picture of how all these companies are spending on CapEx for AI demand, and then also the backlog there and looking at AI demand? Did we get anything from Intel that makes that picture any clearer?
I mean, right now it feels like every company has to raise their capex simply because all the components are getting more expensive. In fact, if you're not raising capex, in my mind, that is a sign that you are cutting back somewhere else. And so the fact that Alphabet raised their capex by 4% for the full year 2026 is a sign that they are actually taking in the memory prices into account and not curtailing anywhere else. And same thing with, I would say, even Intel. Things are getting expensive for them in terms of making those investments. So it's a good sign that these companies are staying on track when it comes to taking the component price increases into effect. And they're not holding back in terms of cutting somewhere else. So I view it positively, personally, in terms of this overall AI infrastructure expansion.
Right. If you're looking for signs of optimism, it's not just about growing backlogs and other things, but it's if you are willing to raise prices and still keep on spending. You wouldn't do that unless you felt like the momentum is going to continue for longer, correct?
Exactly. And look, Alphabet did give us a proof point in terms of their cloud growth of 82% and margins expanding to 36%. Yes, near term, they may come down, but that's for a different reason because they're renting from, third parties. And so everything, every data point that we gathered this week, at least, was positive. Obviously, we'll find out next week if the same holds true for Microsoft, Amazon, and others. But the narrative so far supports the AI infrastructure expansion as well as the ROI you are seeing on that investment.
So, okay, let's talk a little more about the big picture and kind of the week that was. We'll if we have time, we'll get to the president's view on tech and tech with regard to Europe. But given that we have 4 more of the Mag 7 next week, Mandeep, we'll hear from Apple. I'm trying to understand the big picture of what we learned this week and what we need to be prepared for next week.
I mean, 2 big things. One is obviously the cloud revenue comparison. And now that, Alphabet has set the bar so high with their 82% cloud growth at a $100 billion run rate, and the backlog that they have shown 500 plus billion. Now, Microsoft will be measured to that bar in terms of whether Azure growth is 40% or 45 or 50. Same thing for Amazon AWS. Is it going to be 30 or accelerating sequentially? Because I think everyone is expecting to see ROI on this big spend in the cloud numbers for sure. Meta, it will be different because they don't have a cloud business, and it'll be interesting to see how they talk about that on the call in terms of what they plan to do going forward. And Apple, to my mind, they are another case of a company that is facing component price increases that, I mean, if I were to contrast them to Intel, which said second half, consumer PCs may actually slow down because of the demand destruction tied to higher memory prices. The same thing should be applicable to Apple. So it'll be interesting to see what they end up guiding to for the second half.
Hey, 30 seconds. Anything we need to know about the president here out on social about EU fines against Apple and Google and looking to kind of go back after the EU? I mean, these nations have a right to oversee these big companies that operate there. Just got a few seconds, 25 seconds.
I mean, very supportive of big tech, both on the EU side as well as the open source models and how they are looking to scrutinize them. So overall, positive for big tech companies in terms of the support they're getting from the administration.
You're amazing. We owe you like an Apple basket or a box of chocolate or something. Mandeep, thank you for always being there for us. Mandeep Singh, Bloomberg Intelligence Global Head of Technology Research. Coming up, we get a view from the CFO suite. We do, right?
We do.
Maybe both.
We get a view, and we also always love when Mandeep joins us. That's next.
We do.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks lower. Stocks trading mixed right now. Oil is trading lower. West Texas Intermediate crude 89.24 a barrel, down now by 3.2%. Barrel of Brent 96.73, down by 3.9%. S&P up 13, up 0.2%. We've got the Dow up 222 points now, up 0.4. Nasdaq lower by 90. Nasdaq Composite now down 0.4%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down 3.6%. Intel weighing on the index. We've got Intel shares after earnings now lower by 5.7%. 10-year at 4.67%. The 2-year, 4.32%. Spot gold up 0.2%, $4,059 the ounce. And again, West Texas Intermediate crude down 3.2%, $89.23 a barrel. Price hikes at Qualcomm, the biggest maker of smartphone processors, plans to increase prices by a percentage in the double digits. It's a move that is likely to ripple through much of the tech industry. Qualcomm shares, they are trading lower. Qualcomm down now by 2.1%. Recapping, S&P 500 index higher by 14. The NASDAQ 100 index down 0.8%. And right now, we've got West Texas Intermediate crude, $89.20 a barrel, down 3.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcast. I'm Charlie Pellet, Carol, and Tim. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stanovic live here at Bloomberg headquarters in New York City. So we love to check into the C-suite, and we're going to do that in just a moment. And this next company, what's really intriguing is that we've talked a lot about AI and the impact on software companies in particular and the SaaS environment. Bloomberg reporting this week that OpenAI is set to announce that it now has 10 million people using two of its agent products, Codex for coding and ChatGPT work, for a wider mix of tasks, nearly doubling usage from earlier this month.
In addition to that, just today we learned that Anthropic is rolling out a new AI model. It's meant to handle workplace tasks adeptly and affordably. It's a key selling point as some customers grow more cost conscious, and competition is going up from China. A number of AI developers, including OpenAI, Meta, SpaceX AI, are now competing to offer more cost-efficient AI models as businesses increasingly scrutinize their AI spending. Some customers, Carol, have recently imposed tighter limits on employee AI usage after being hit by sticker shock. This is the, should I say, token minning versus token maxing?
We've all been reading all of that. We're having some technical problems, so we're hoping we can work them out because we want to get into this discussion in just a moment. In the meantime, let's just do another check on the market so that we can then get to our guest and our own Nina Trentman, who is in studio with us. We're looking at a market, a bit of a mixed trade right now, just up about 14 points on the S&P. Dow definitely higher, up about 0.5%, but we are seeing some pressure on the NASDAQ 100. It is down about 236 points, down 0.8 percentage point.
Yeah, taking a look at the NASDAQ 100 right now, the stocks that are in the NASDAQ 100 that are making the big moves today and that are weighing to the downside. Some of those neoclouds, like Nebius Group, down 11%. SanDisk, there's a little bit of a decline in the memory stocks that we're seeing today. SanDisk down a little more than 10%. CoreWeave down 9.2%. We do see some software stocks, though, higher, including Adobe up 6%, Workday up 5.5%, and Intuit up 4%.
All right, so what's interesting, too, is we're coming off a week where we're getting ready for another week where there is going to be some big earnings. We're talking about 4 of the Mag 7 next week. So you've got Meta Platforms, you've got Microsoft, you've got Amazon, you've got Apple. Not all the same kind of company, each of them kind of with a different AI story or AI-related story, but nonetheless, it'll be really important because so much of the market momentum over the last few years has become because of these big tech companies.
Yeah, and interestingly, if you look at the Mag 7 and the companies that have done the best so far this year, Apple's actually the one in the lead. Shares of Tesla are in last place, having performed the most. And a couple companies in there are pretty much flat on the year. Alphabet, as of yesterday, was one of those.
All right, so we do want to get to our next guest, and we are delighted once again to get a check-in on the C-suite. As we mentioned, one of the things we find fascinating is that generative AI market, an agentic market in particular. Bloomberg Intelligence has really been focusing on that and how much that will grow, projecting it to grow to $2.3 trillion by 2013. That's the global generative AI market, and a lot of that is because of the rapid proliferation of autonomous agentic systems in enterprise workflows.
Our next guest company has its own agentic offering, supply chain agent, merchandiser agent. With another edition of the CFO briefing, we welcome Gordon Pothier, the CFO of Board. It's a privately owned AI continuous and enterprise planning platform. Gordon joins us from Boston. Also with us, the leader of our CFO coverage, Nina Trentman, Bloomberg News senior editor. She's editor of the CFO Briefing newsletter. You can subscribe to it at bloomberg.com/CFO-briefing.
We have a lot of questions, but I got to say, before we get going, Gordon, would you just kind of lay out what you folks do? Because mentioned that you guys are an AI continuous and enterprise planning platform, which for those in the industry will know what that is. But if you could just lay it out just briefly, and who are some of your big customers or your typical customers?
Yeah, absolutely. And thanks for the opportunity here. So at the highest level, Board is an enterprise planning platform. I realize that sounds pretty generic, right? So I like to think about us as an operating system for enterprise planning. So instead of companies using separate tools for budgeting, forecasting, reporting, operational planning, we bring that together in one platform. We're a system of record, which is very valuable for many of these companies. But we use AI. We just released AI agents recently, and this is really to help support the planning process. It's not really to replace what we do. It's really to help accelerate and support it.
Maybe to follow up here, Gordon, thanks for joining us again. You and I talked about AI and the meaning for your business. You talked about it as a challenge and opportunity at the same time. I'm curious, talk to us about how you're talking to customers about AI and how that fits with your existing business. Like, do you still have a business?
Absolutely. And we certainly believe that we do. I think the conversations we're having right now, I would say, even if a CFO doesn't necessarily believe that AI will replace their planning platform, they're obligated. I'm obligated to ask those questions. My CEO is asking, my board is asking, what can we do here? So the conversations we're trying to have with our customers are really around what are they trying to accomplish? Most of our customers are running sophisticated businesses. They're often global, often public companies in retail, manufacturing, consumer goods. Again, they need a system of record that they can rely on. They need governance around that. They can't have one answer today and a different answer tomorrow because of the way the LLM is responding. So for us, it's very much trying to make sure we're aligning with their expectations, providing that system of record, but with AI agents as a helpful tool, as an accelerator, but not as a replacement.
You know, I don't mean to pick on a company like Salesforce as this example, but it's down more than 50% from all-time highs back at the end of 2024. And a lot of people are using this company as a poster child for the so-called SaaS apocalypse and the idea that, you know, we're going to be able to code something or vibe code something that replaces seats that someone would buy from one of Salesforce's many software as a service products. Is the public market, are stock investors getting this story wrong in your view?
I don't know if they're getting it wrong. I think there is an element of hype, and I think there's an element of just acceleration of where we are today, and maybe where we may be in 5 years. But you know, again, and I think it does depend on the company profile too. If you're a small mom and pop shop, maybe that's possible. But if you're an enterprise class business, if you're a public company, if you're running a sophisticated organization, I don't think a vibe coded solution is really going to provide what you need that's supportable, sustainable over time as your business changes, as you pull in an acquisition or not. It just, there's a lot of complexity that goes into what a company like Salesforce has built.
And just to follow up, is like in terms of conversations with your clients, is this something that you have to argue as board, saying, well, actually, you can't just replace us with AI or an LLM, but this is why? Or is it not really coming up with customers at this point?
I would say it's coming up, not at the argument stage yet, but more at the exploratory. Why should I renew for 3 more years? Isn't this going to be replaced? You know, some of those exploratory conversations. And again, we're happy to engage with those. I think for the most part, the companies that we're dealing with, they get it, but they want to understand. They want to test that theory. They really want to make sure that they're thinking about it the right way. And we feel like we have a really good conversation to have around that sustainability of a platform like Board.
Not argument, but exploratory. Do you anticipate it's going to get to the point where it is more argumentative?
It's a good question. I think it depends. You know, I think even 6 months ago, I think the expectation around what was possible has even changed, in the last couple of quarters. I think one of the things we talk a lot internally about is the concept of just because AI can do something, should it do it? Should you put the reliance on it? In your last segment, you were talking about the cost of tokens. Mm-hmm. Do I want to put something that I can do some other way? Do I want to put that dependency on AI with the potential for my costs to go out of control later on? You know, those are questions that we need to be thinking about as well. So it's not just the pure capability, it's the should we go down this path?
I mean, you're a CFO, right? You understand that you look at the spend on CapEx, whatever it may be, and you want to see that ROI. You get it, right?
Of course, yes. And this is internally, we're very much in this stage. We went from this, let's roll it out, let's get adoption, let's make sure that we're using these products now, to let's justify the business case. Let's really understand the ROI. Can we measure it? And again, just because we can measure it, do I want to be thinking about this in a year or two now? Will I think about this in a year or two the same way, based on how the costs are trending?
Gordon, the company is still privately owned. You're owned by a European private equity fund. With the IPO markets being pretty strong right now, I'm wondering how the company thinks about its journey forward. Do you expect to remain private? How much are you thinking about IPO readiness at this point?
Yeah, Nina, like we talked about in our earlier conversation, right now our path really is to continue as a private company. But the way we operate internally is very much from that public company mindset. So we really hold ourselves to strong quarterly milestones, our ability to run a predictable business. We're just in a fortunate position right now where we're very aligned with our PE owner, Nordic Capital, around the direction of the company. And it's really to build a good, strong, sustainable company, continue our expansion path. We're profitable. We don't have a forcing function. We don't need to go raise capital right now. So it's a fortunate position for us to be in. So we can focus really on driving the business. If things change down the road for us, we may consider that opportunity to go public.
But is there a chance that you may never go public? You may stay owned by private equity. You're generating cash.
It's very possible. It's very possible. And
Okay.
the liquidity markets are, the private liquidity markets are very strong, can be very strong, maybe not right now, but I think there's many options. I think we'll consider all of them, but again, really with the focus of how do you build a good, long, sustainable business?
Gordon, you talked about the expansion of the business as one of the things that you're currently working on. Talk to us a little bit about that. You originated in Italy, but the US is now a very important market for you. What does that entail in terms of next steps?
Yeah, so the history of Board is interesting. It's very much a European history. Our strongest and largest markets are still in Europe, in Italy, France, Germany, UK. And we're actually seeing our best growth continue out of those markets. The US market, the North American market, is obviously the biggest addressable market for us. We're in the market. We've been in for the last couple of years. It's a very competitive space, but we continue to push the growth in those areas. We're trying to do it on our own as well as through partners, which have tremendous influence just in the office of the CFO.
Yeah, I was just wondering, because you did a deal in 2024 and acquired a company, wondering, do you see that growth through partnerships and organic growth, or could you also do more deals?
Both. We're certainly, I would put us in the opportunistic category right now as it relates to acquisitions. I think if something comes along that fits with us, that expands our core platform or allows us into, to better get ourselves into the U.S. market, we would definitely look at it. We're not necessarily running processes, but we're definitely looking as opportunities come up for those acquisitions.
So, you come to a company, you came to this company as CFO about a year ago, I think a year in this coming August, mid everything that was going on in AI. When you came in, did you anticipate kind of some of the challenges of AI, at least, or the speed or pace that these challenges are kind of coming at companies like Board and others? And how much has kind of it changed since you came on board almost a year ago? Is it all kind of happening so much faster?
It's a great question. It feels like a very dramatic change, even from a year ago. So, I feel like today we're living in just a very volatile time as businesses and as CFOs trying to deal with this volatility. You talked about tariffs earlier, right? I mean, all of the things that are coming at us, including AI. And I think somehow we as CFOs need to balance the short-term pressure to adopt AI, show ROI and cost savings, but also with our long-term fundamental beliefs on how to scale the business. And sometimes they may marry up and sometimes they may not. But it's a volatile time for sure, and I don't see it ending anytime in the near future.
I'm curious, Gordon, how Board's clients are doing right now. You've got a great view into what these companies around the world are doing at any given moment. We mentioned some of the companies. Others include H&M, Burberry, Toyota, Coca-Cola, HSBC. and others. What can you tell us about what you learn about the macro just by understanding what your customers are doing on your platform?
Yeah, it's a great question. It's interesting because, at Board as a software company, we're not necessarily affected directly by some of these larger economic factors, but our customers certainly are. It was tariffs last year. It's potentially tariffs again. So what we're seeing through them is more scenario planning, more capability to understand how to deal with that volatility. Also looking for ways to trim costs, right? So, and that's where AI, I think, can be a benefit, or maybe not. But they're looking to us for help. One of the unique differentiators we have through that acquisition we did was we actually can pull in macroeconomic indicators and allow companies to use that for their forecasting. So that's a nice benefit we can offer our customers, so they can maybe look just outside of their own walls around what else is happening, and ultimately how can they best react to those changes.
Gordon, I know many companies these days are very careful about spending. They're scrutinizing not just AI tokens, but also other licenses, software packages that they spend on. Are you impacted at all? Are you seeing companies clamping down on spending for board services, or not so much?
We're fortunate that we have very high retention rates and we're a very sticky product, but it doesn't mean we're immune to the questions and the pressure. Companies, we're doing it internally at Board. We're trying to renegotiate some of those contracts. How can we bring down the cost here so that I can go fund my AI investment? So we're definitely seeing it. We've been managing it well so far, but we don't take it for granted. We work very closely with our customers to make sure that they're seeing success, and they will continue to be long-term customers.
We have one more question here for you before we have to wrap up, Gordon. Yeah. Just wondering, from a CFO perspective, one thing that I'm asking a lot about in recent interviews is how do you keep an eye on AI costs as a CFO yourself? Like, how do you manage the fact that tokens are expensive and people tend to go through them faster than we all thought? Is that happening at Board?
It definitely is. We've got some pretty detailed tracking around not only the token usage, but also the other tools that we're bringing in to help with our AI story. So we're managing it at a functional level, trying to balance, adoption, like I said before, with ultimately just good cost control. And some of it goes back to, again, just because we can do it in AI, should we? So we're asking those questions and trying to make sure we have a good answer on the other side.
Anybody get cut off?
Not yet, but we're definitely starting to. The ceiling's coming down for sure.
Cheryl, your AI stopped working, right?
No, it's funny. It's a conversation I'm increasingly having with lots of folks about that. If this is just not going to be open-ended because there is a cost to it. Gordon, really appreciate it. Take care, be well, and have a great weekend. Gordon Pothier, he is the CFO of Board, joining us here from Boston. And of course, our own Nina Tretman. Nina, thank you so much. She's Bloomberg News Senior Editor of the CFO Briefing newsletter. You can subscribe to it at Bloomberg.com/CFO-briefing. New one comes out every weekend.
Hey, in just a minute, we're going to speak to the battle of the brands. Adidas and Nike, the World Cup, and life on and off the battlefield. And the field. That's next. First, though, Adidas. Yeah. First up, though, a check of the day's trade and top business stories. Charlie Pellet is standing by. Hey, Charlie.
Hi. Thank you very much. And here's what's going on. Interesting day for the equity market. You got the Dow higher right now. S&P has just turned negative. Yes, down 6 points right now, down by about 0.1%. But you dig beneath the surface, you check the S&P 500 index, and we can see the 364 members are higher right now, 139 lower. Bottom line, though, the S&P down 4 lower, little change, down under 0.1%. NASDAQ 100 index, they are both in the red. They've been lower all day. NASDAQ down 174 right now, down by about 0.7%. NASDAQ 100 index trading lower by 1.1%. The SOX, the Philadelphia Stock Exchange Semiconductor Index, down by 4.4%. This as Intel tumbles 6.3% now after earnings. The Bloomberg Mag 7 index ahead of a couple of key members reporting next week, Amazon and Apple among them. Right now, the index is down by 0.1%. The SOX down 4.3%, the 10-year 4.68%, and the 2-year currently yielding 4.32%. Spot gold, meanwhile, up $4 the ounce, little changed, up 0.1%, 4,053 on gold. Crude, big story today. WTI 89.16 a barrel. It is down 3.3%. Brent crude, 96.52. Barrel of Brent down 4.1%. This time yesterday, we were looking at Brent crude trading above $100 a barrel. Bitcoin down 1.6%, 64,083 a token on a Bitcoin. Earnings news. Verizon reported mobility and broadband sales that exceeded Wall Street's expectations in the second quarter. Shares of Verizon today, they are higher by 4.9%. T-Mobile reported yesterday. That stock up by 6.3%. Earlier in the week, we heard from AT&T. AT&T shares up now by 4.6%. Also out with earnings, American Express, it reported this morning. Shares are down 5.3%. Now, Amex said second quarter expenses surged 12% as the company spent more money on marketing to attract and retain those premium cardholders. Again, right now, American Express trading lower by 5.3%. Some of the other stories that we're following today, as I mentioned, the price of crude oil, West Texas Intermediate crude down 3.2% right now, 89.23 a barrel. We've got the oil majors trading mixed. ExxonMobil down 0.1%, Chevron up 0.3, ConocoPhillips up by 0.1%. Tim and Carol, that is a Bloomberg Business Flash.
All right, Charlie, so appreciate Charlie Pellet, of course, with an update on the market. So not what he dreamed of, and you can kind of understand why. And I mean,
it's not because he was a Messi fan.
No, it wasn't about that. I mean, for a sportswear and sneaker company, if you're Nike, having its teams fall short of the World Cup, it's kind of a bit of a bummer, especially falling short of the final. All of it, both teams, not there. None of your teams, none of your jerseys, none of your iconic logo out there around the world where billions were watching.
What about the cleats?
Not there.
Okay. Yeah.
No. Nil.
That's yeah. All right. In the FIFA world, I'm like, you've got the lingo down, Carol. Just wait 4 more years, and then you'll be able to say nil again. Well, the story is really about Nike versus Adidas.
Yes.
We've got Bloomberg News retail reporter Lily Meyer on set with us. Tell us about the Nike soccer boss and his disappointment about what happened over the weekend.
Yeah, so the Nike head of soccer messaged employees and basically said to them, thank you so much. This was great, but it's not the result we dreamed of. And as you said, they weren't in the finals. So, yeah, another 4 years and another year until the Women's World Cup.
How big of a deal is the World Cup for Nike?
It's a huge deal. I mean, I think right now every sporting event is an opportunity for Nike to prove to the market and to shoppers that they're dominant. And so I think it's another opportunity where they didn't shine.
Who would you say? I mean, you think back to like the teams that were in it. Adidas was a huge winner, of course. Also Adidas with the soccer ball, the World Cup ball. Mm-hmm. Where else did Adidas win and Nike lose?
I think another big moment this year was the London Marathon. So Adidas had 2 runners who beat the 2-hour goal, a goal Nike had been chasing for quite a while.
I mean, Lily, is it just a case of you win some, you lose some? I mean, I'm sure there's moments we know where Nike's just been plastered, somewhere in a tournament of some sort along the sports universe. Is that just what it's about, or is just Nike having trouble lining up with the right teams, if you will, and kind of staying very relevant to a population that they hope will buy their stuff for years and years?
Yeah, I mean, I think it's a mix of both. Nike obviously can't control what the players do on the field.
Right.
That's out of their scope. But I do think it's a moment where, as a sportswear brand, you want to shine, and it's a missed opportunity.
You've been doing a lot of writing about Nike. And to be fair, we've been talking a lot about Nike with our Poonam Goyal of Bloomberg Intelligence. And, just following this, I mean, we got earnings earlier this month. Executives gave a cautious outlook. They warned about elevated consumer anxiety. So once again, we know Nike's been working on a turnaround. They've got a new CEO. Why is this turnaround so tough? Is it just a big ship to turn and kind of move the needle?
Yeah, I think the ship is a great analogy. I think Nike's a huge company. There are lots of areas that need to turn around. I think some areas like running in North America have shown progress, but I think Others have been more persistent challenge areas for Elliott Hill, their CEO.
Well, speaking of executives, I'm actually getting some IBs from Tom Thornton over at Hedge Fund Telemetry right now. He says he's long Nike. He reminds us that a new CFO starts next month and comps are going to get easier. This is what he certainly thinks. What's the street saying about what Nike can do? I mean, we went through some of these numbers a few days ago. It has been such a challenge for this company. I mean, I have a couple friends who worked years. They live in Portland, worked for years at Nike. Both of them did, the husband and the wife. One of them left. The other one took a buyout. Neither of them are there anymore. These were like Nike people for life. Mm-hmm. I mean, it has completely changed.
Yeah, I mean, a lot of executives departed during the John Donahoe era under the former CEO. There have been a lot of layoffs and changes and reorg. So I think, but on the positive, employees really respect and admire the new CEO. I think there's still some hope that he has what it takes to bring it back. So.
Yeah, I mean, I don't know. You also had another story I just want to throw on top of this.
Shares down about 50% since he's been there since October 2024.
I mean, it's a rough chart. People on radio can't see it, but it's kind of not quite a ski slope to the downside completely. But overall, it's also falling off a cliff at one point and then coming back and then going back down.
Let's keep going with that metaphor and talk about ACG, all conditions gear, because that is a big bet that they're making when it comes to mountaineering, when it comes to climbing, when it comes to trail running and just being outside. Has that panned out?
Yeah, I mean, they used the Olympics to relaunch ACG.
Which is funny because that's not really an Olympic thing.
Yeah, I think it was kind of like the Milan, Italy, Alps
and I guess,
moment,
skiing
outdoor.
And being outside.
Yeah, exactly. Okay. So, but it was super present during the Olympics. I think, it's more present in stores than it was. They did a huge relaunch. I'm not sure we've gotten enough information to tell whether it's really had an impact yet, but I'm curious to see more about the impact of ACG. Clearly, it's something they're investing in.
So what about, we've got about 45, 50 seconds. You also put a story out earlier this week, Nike ending online sales agreements with potentially hundreds of distributors in China as part of a sweeping effort to revive flagging sales in the region. Just real quickly, how does that move the net?
Yeah, I think that's something really interesting that came this week. China has been one of the areas that continues to decline, has really not turned around. And so Nike is saying, we're going to invest more in our own stores and our own channels, and is pivoting away from some of those online retailers in China.
I mean, iconic brand. You think about brands that are out there, right, and logos, but it is interesting to see some of these brands that have been around for a while still have some issues and some troubles.
Listen, in the 7-year-old demographic, I'll tell you that they know about Nike and Adidas quite a bit. If it's got a Nike swoosh on it or the Adidas logo,
that's why I say
the kids want it.
A younger generation, like they go for it. Lily, thank you. Appreciate it. Lily Meyer, she's Bloomberg News retail reporter. Be sure to check out her reporting. It is on the Bloomberg and at Bloomberg.com. Hey, folks, counting down to the close. When we come back, we've got to check on stocks on the move. This is Bloomberg.
This is Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec on Bloomberg Radio and Television.
All right, everybody, we're headed towards the last hour of trading on this Friday and for the week overall. Carol Massar, Tim Stenovec live here at our Bloomberg headquarters in New York City. So what do we got? Flat on the S&P, not even down. 0.01%. We call that unchanged. The Dow is definitely higher here, just up about 1/3 of 1 percentage point. NASDAQ 100 giving back about a 1% in today's session. It is down about 305 points. We're kind of near our lows of the session, especially when it comes to the S&P and the NASDAQ 100. It's been a lot this week, but I think everybody's waiting for it next week now. Fed meeting and a lot of big tech earnings. Okay,
that's part of the story. The other part of the story is the 2 weeks of renewed fighting between the U.S. and Iran and what has happened to oil prices. Brent is up 30%, the international benchmark, just from the start of this month. We do see Brent down right now by about 4% and WTI down by about 3%, but still on the year, both of those up over 55%.
Yeah, I mean, if you look at the most read stories, President Trump seething as the Iran war spirals anew with no end in sight. You've got the president rebuilding tariffs with new levies on 60 economies. And so there is a lot coming at investors. There was also President Trump out on social about President Xi and talking talking about not giving weapons to Iran. Like there's just so much coming at investors that I think raises a lot of questions about what comes next. But we'll keep an eye on it for you.
Well, we're also keeping an eye on stocks on the move. I'm Tim Stanovic along with Carol Masser. Let's take a look at some stocks on the move today. With us is Bloomberg News Markets Live strategist Tatiana Dare with today's stock movers. Hey, Tatiana, what's on your radar?
Let's start with Intel, because what a sharp turnaround, what a sharp reversal for this stock for what really was a blowout report, right? Earnings doubled the forecast, guidance above expectations, sales for the AI data center segment surging 60%. All around good news. CEO saying demand for CPOs is taking off. Well, the investors are not really rewarding that, and you have to ask yourself why. And then you sort of zoom out the chart and you see that the shares price has absolutely gone parabolical this year.
Right.
And that set expectations very, very high, obviously. And we looked among other AI giants. Its valuation, it's actually the highest among some of the big AI players. And forward PEs have jumped more than 100%, or rather more than 100 just last month. So that just tells you how hard the earnings bar for this company is and why explosive price gains can be problematic.
Yeah, I mean, it's an unbelievable story in terms of Intel, right? And we continue to keep an eye on it. All right, so there's Intel. Let's go to another tech name that we talk about a lot, Oracle. Ticker is ORCL.
Oracle shares down 3% there, also on good news. The company got a 10-year software deal with the Pentagon. The contract valued at over $3 billion for the first 5 years. Over 7 of options are exercised. And this is a company that can certainly use some good news given its steep underperformance.
Stock is down 3%
this year and this week. And 38 there just year to date, and heavily underperforming, the Magnificent Seven. And the market, but it looks like the stock just got dragged into this broader tech rout. And the fact that it is actually underperforming the Magnificent Seven today and the software baskets, which are all higher slightly, tells you that this is all about the health of those balance sheets. It's all about the cost of AI spending, which is really, really concerning investors.
I mean, it's a little wild. If you just look at the one-year chart for this company, Carol, you and I were on the beach when Oracle reported results last September.
Yes.
We were on the beach for work.
You're talking about, Huntington, right?
We were in Huntington Beach. And shares spiked up to $324 a share. They're down now to $116 a share, down 64% from then.
Yeah, it's unbelievable bouncing around here. But it's a story that we've been talking about a lot, certainly when it comes to the SaaS companies and so on, right? Well, they're more like... Yeah.
No. Well, it's also
not
just,
really SaaS, but
and there's the debt question too.
The debt questions. Yeah. Okay.
All right. One thing you don't need on the beach is a parka from Canada Goose.
Exactly. That
not
cost
yet.
$1,000 too.
Yeah, exactly.
The maker of those parkas, Canada Goose, down about 4% here after a downgrade from Williams Trading to sell, anticipating great risk related to President Trump's 50% tariffs on some Canada goods that is expected to come into play here in August. The analyst there is concerned that the company might pull forward guidance because of that risk, noting that over 25% of its revenue come from the U.S., so it's a great risk for revenue. Well, for what it's worth, the company did guide for low single-digit growth in May. So at least we have that, and it's reporting next week, so we will find out. But the tariff question has started to come back for some of these companies, particularly acute for the likes of Canadian.
Those jackets are made in Canada.
Yep, that's why they're called Canada Goose. The winter jackets, by the way, are already out at Bloomingdale's. So I'm just next to the bathing suits. I'm a little confused.
I think there are some companies that have different names that are where they're named. Where the products are made outside of the U.S.
Okay, but this one actually made.
Like, remember, President Trump's ties.
Yeah, you're right.
Were made in China.
Oh, wow.
Way back in the day.
Okay.
That's good memory there.
Tatiana, thank you so much. Check out our Stock Movers podcast. 5-minute episodes, big winners and losers. Find it on Apple or anywhere you get your podcast. Also, check out Tatiana and the Markets Live team, a chart on the implications of the AI spending race. Less share buybacks. It's a great read. Stick around, everybody. The close coming your way. Tim and I continue on radio.